The house. Not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Good morning, everybody. How we doing today? Happy Monday. Interesting holiday, yeah. Let me show you something here. Let's drag this over here. So this is, if you can see my screen, this is just me kind of tracking the Santa rally. This was as of Friday's close. So we started here officially with the technical Santa rally. We closed here on Friday. Essentially, it was flat. And then today we opened up around 588 to 587. So Santa is officially in the red. And looks like this is, this is why there's no guarantees in trading. Okay, crazy statistics. You go back 70 years of trading. We have only seen back-to-back losing Santa rallies 2 times. And so we did have a losing 2023 Santa rally. And right now, looking like another back-to-back. So if you think about this Santa rally for 70 plus years of trading, it's only happened 2 times. Somebody might argue and say like, well, that probability is that the Santa rally is going to be positive. You're right. But this market's going to have to claw back in a pretty big way, because right now, to get back to positive territory, we would have to see the market go right back up to around 1.7 to almost 1.9% in gains just to get back to zero. So to get flat for the year, we'd have to go up about 1.8% for the Santa rally. Now, the market's still hot. Like, the market still had a great year, right? I mean, we talked about this many times here the last month or so. It's like, look, I think that this market is a lot easier to trade if we're starting 2025 at a discount. Okay. Now, we might be looking at some real-time news, like what's leading the way right now. Let's have a look. We've got some big gaps. I mean, this is the interesting part about holiday trading. We had a gap right here. We have a gap right here. You know, a lot of traders are probably looking at this and saying, like, this could be a topping pattern. This could be a head and shoulders pattern. It certainly can be. Look, this box is measured from my all-time high. This is the all-time highs we just had going back to the 6th of December to the FOMC low. Okay. So if I take that swing and I project some symmetry, it's not a surprise that symmetry gets us right back into where? The election gap. So could this be where the market's satisfied? Like, okay, the S&P, falls to fill the election gap. Is that a spot to get some strength? Sure. But if this is hey, Heather, how are you? This is a symmetry play. There's also that potential. I mean, if we know patterns, we have a symmetry play, okay? And we also have the measured move based on the neckline. Let me show you what that looks like. So if I draw a box here, let me see if I can move this over. Well, you get it. So if I have a symmetry play, so I'll go high to low. Okay, so I see a top to a bottom. I look at a swing. Symmetry would be that. So we go high, low, lower, high, lower, low. That is this measured move right here. So if we go high, low, lower, high, lower, low, that's symmetry. That put us right around this 572 area. I take that back, 574 to 575. So if you want to make a note here, 574 to 575, that's going to be a symmetry area. Again, notable correction. That puts us back inside the 100, between the 100 and the 144 daily moving average. Is that an attractive spot to look to get long? Sure. Now, the other side would be that we have a break of the neckline. Okay, if we break the neckline, doesn't matter if price comes back to retest it. you just measure it from the break of the neckline. So if you take a swing from high to low this way, okay, and then rather than using symmetry, you look at the break of the neckline, and that would be your projected move. Now that projected move, get rid of that, and that head and shoulders would be a measurement from this low to this low, or from the FOMC low, right? I mean, it's not going to be perfect, but it's going to be pretty darn close. So that would put us right back into roughly the 200 moving average, or if you go from the FOMC low, it's almost perfectly sitting at that 200 moving average. And that's also why, I mean, you could go back for the last 2 or 3 months and see how many times I've mentioned, I think we're going to find a 200 moving average on Nvidia, Meta, Netflix, SPY, right? It's the bar count. This hasn't hit the 200 moving average since November of 2023. So we're over a year into this bull market with a little, April, August hiccup. And if we have a little topping pattern here, we start out, we get to, I mean, I just think it's a good spot to balance out, Also, let's see what the heat map looks like. But do you understand that all we need to see here is some end of year profit taking and this market can start to drop? Because where do you think most people are taking profit? Most people are probably taking profit on their Mag 7 exposure. The inflows that the Mag 7 is seeing, the inflows into, everything tech, everything consumer, or what would be communication services, technology in the sectors. Mag 7's like 30+% of the market. I mean, it's super high concentration. If we just have financial advisors right now rebalancing their portfolio for a percentage. So let's say they've got, Mr. and Mrs. Smith with a 10% allocation into Mag 7, right? And they could just buy individual stocks, or they could trade the mags, they could trade the buckets, they could trade the ETFs, whatever they want. But if it's a 10% allocation, okay, that 10% is probably worth 20% of their portfolio now. It's been such a good performance. It's essentially carried the broader market this year. Yes, we had some broad market a little bit here and there, but it wasn't fully sustainable, right? If you want to see broad market, look at the Russell, right? The Russell's not representing, good gains this year. The Russell's given back all of it. We had that huge squeeze post-election right to the tops again, and we're pulling right back. I mean, I don't know if I want to touch the Russell until this thing comes back down to like 200 or maybe 170. I could be wrong, but there's so many unprofitable companies in this Russell 2000 that I'd be interested in maybe like one of the derivatives, like trade like the Russell 200 that's supposed to be like better concentration, better performance. Get rid of some of the crappy positions. Okay. So also, Mark's mentioning it appears somebody's moving into bonds. Are we seeing bonds up today? I mean, if bonds are getting a little bit of safe haven run, that's a good thing. I mean, U.S. 10-year down 1.9%. It's about effing time. But is this going to be sustainable? I'd like to think so. Does everyone know right now that we've had like the highest correlation between stocks and bonds like almost ever? Let me see if I have a screenshot of this. I just, of course, did the typical deep dive into some content this weekend. And we have here, let's see, some catalysts for this week. We have the interest expense on the federal debt is now over $1 trillion, the second largest outlay in U.S. government spending, surpassing defense and health spending by $300 billion. We saw $35.3 billion in net outflows within a single week. That was last week. That's the largest outflow since December of 2022, signaling some potential liquidity concerns. We've got China that is potentially facing deflation. Their government bond yield is falling. The Fed reduces its balance sheet. There could be a bit of a liquidity crunch in 2025. If the Fed continues to reduce its balance sheet while pausing and maintaining rates and being more restrictive, if the market's grasping for liquidity, grasping for easy money, grasping for M2, if it's not getting supplied by the U.S. and China, we could also see a bit of a slowdown. Apple, Microsoft, Nvidia now comprise over 20% of the index. That's a record high, creating concentration risk of vulnerability. Private sector declining as well. What else? Geopolitical stuff. Lots of baby pictures on my phone. Here it is. Oh, yeah. 3-year correlation of bonds. Let me see if I can send this screenshot. This is crazy. I'm just going to email this and I'll share the screenshot. There we go. Stocks to bonds. Let me see how long this goes back. I think this goes back to 1980. See if that screenshot comes through. But I will say this. I'm happy to see the U.S. 10-year going lower. It'd be lovely to see that the bond market, the SHY, off the FOMC lows, we're up around 0.33% on the short term. And here's 7 to 10 year off the FOMC lows, up about 0.8%. And TLT, not much of a mover, but still off the lows by about 1%. So TLT, the 20-plus year Treasury bond compared to the U.S. 10-year. Okay, nice to see a decent red day. I'd like to see a lot more of it, that's for sure, especially if you want to buy a car or a house in 2025. I read some interesting stats on healthcare over the last 20, 30, 40 years. It's crazy expensive. I looked at the inflation on McDonald's. Everyone's heard about the Big Mac index. You're looking at numbers that are pretty staggering. It's like the subtle, sneaky theft of inflation. 2024 compared to 2014. I have this McDonald's inflation indicator. What's number one? Nobody should be eating McDonald's. But number two, if you eat, let's say, a McChicken sandwich, 2014 it was on the dollar menu at $1. Okay, right now, a la carte, it's $2.99. That's 199% increase in the last 10 years. That's the number one increase in McDonald's is McChicken. The McDoubles up 168%, $1.19 now $3.19. Fries, $1.59 for medium fries, now $3.79, 138% increase. Quarter pounder with cheese meal, a decade ago was $5.39, now it's $11.99. 122% increase. An Oreo McFlurry, $2.39 now $4.49, 88% increase. Chicken nugget meal, $5.99 now $10.99, 83% increase. Okay. How about your medium drink? Your dollar any size. Well, it's $1.29 10 years ago. Now it's $1.61. Big Mac index, 50% increase. $3.99 now $5.99. McDonald's inflation. Ba-da-ba-ba-ba. I'm paying more for it. I think that's the slogan now. But I guess use your app, right? I'm going to get a McGriddle. There you go, Jeremiah. Get that McGriddle. Get that pancake English muffin. Okay, let me see if I have that screenshot here. Come on. I thought I sent it myself. Anyway, let me just look at my screenshot here. So I see 0.76% correlation, which is one of the highest we've seen on record. So going back to 1978, I wish you could just see the screenshot here. I'll try to send it to myself one more time. Let me try to send mail. There. Okay, hopefully that sends. But the last time we saw this high of a correlation was back into the 90s. We had a 0.64% correlation between bonds and stocks, meaning that if stocks go up, bonds go up. If bonds go down, stocks go down, right? 0.61% or 0.61 correlation was back into the mid 80s. So this is the highest we've seen in over 40 years. Crazy. So anyway, this means that if yields are going down, bonds are going up, well, that means that we're not really playing to the correlation, which is typically what it's supposed to be. The whole point of this 60-40 portfolio is that in times of uncertainty, there's risk-off trading. And if you're going to the liquidity, then the bond market's arguably the most liquid market in the world, right? So if this is a flee to safety and flee to safe haven, bonds might get some love there, maybe. Problem is the Fed's only been controlling the short end of the curve while the long end has run amok. And we talked about that too. This is the threat that I saw was the biggest thing to be concerned with in 2025, which is we have the 10-year 2-month inverted. We have the 10-year 3-month inverted. We have the 10-year 2-year inverted. Look at this jump up. The 10-year and 3-month has been inverted quite a bit. I mean, this thing has ran hard since September to get back to this disinversion. So if there's a run into bonds, I mean, if you look at the prices on bonds, I mean, I'm somewhat interested in getting long bonds here. And I say somewhat, but not really. I mean, is this a spot I'd say I get long TLT again? You know, I know Nick and I had a trade on earlier this year on TLT, and I'm super thankful that I got out of it. You know, um, would I consider getting long TLT again? Maybe, you know, but I don't know, because part of me wonders, like, based on the Fed's action of cutting rates and then issuing all of a sudden a pause and possibly going back to more of a neutral to hawkish tone, does this put more pressure on the markets? I mean, look, if the bond market rips without me, okay, fine. You know, I'll just wait for the better discounts on the stock market, and I'll play the game that way. If it comes back down to these 2023 lows, it's going to be hard to look at this and say, okay, don't get long bonds. It's like, that's a very attractive price. It's pretty attractive right now, but I would still, I don't know. I think something breaks in the bond market because we have like a failed auction, or the Fed's trying to control the short end of the curve while the run-ins running away from it, and that's what makes me nervous about the 10-year yield. Okay, so anyway, top down stuff. Last week I did take some assignment on Nvidia. I did take an assignment intentionally on the SPY. I've got collar trades on that. Let's take a look top down. So SPY down 1.6%. I'm going to make a quick note here of my symmetry levels. Let me do this one more time on the SPY and SPX. So right here, SPX, do I have where'd my drawing go? Guess I'll do it again. Let me get my two symmetry levels. So here, so one symmetry level is right around the gap fill. So I'll put a 575. So a 575 symmetry. Or we have the FOMC low measured move, or to this level. That was like the PCE low post FOMC. So somewhere between, I'll give it a window of 560 down to 555. Okay, 560 to 555 head and shoulder move. Okay, is that fair? So that way you have some expected moves, and this to me is worth waiting for a discount. If we get this 575, this market fills the election gap, is that enough to say, okay, we've had our X% correction? Is the market going to get excited to buy from there? Maybe. It could be a dead cat bounce, so be careful, right? I could see something like this happening where it's high, low, lower, high, lower, low. We fill that symmetry, pull back again, find the FOMC PCE low, and that becomes resistance. Then we have one more flush down. So this could be a quick, like, 5-wave correction. We'll see if it comes back into the 200 moving average, which I think is still going to have to get hit. And I'm more interested in buying it from, this 144 to 200 moving average, potentially into my technical support, which I have connected the dots over the last 9 months. So if we get some bargains, pretty interested in starting 2025 with a nice discount. Doesn't mean I'm bearish, right? Just means that I'm waiting for opportunities. That's why I've kept cash on the sidelines, all these things. Make sense? All right, here we go. So that's top down. Qs, 512.71. I still have a hedge running on the QQQ. Right now it should be up. It should be showing about $21 of real value because I bought the 533 put. Problem is I've got some time in the trade. So my $23 max profit is right now probably trading for like $12 or $13, which means I'm just shy of my profit target. I'm going to see if this will dump a little bit lower. Let me go into the QQQ really quickly. So QQQ, the 533 by 510. I paid 585 for it. It's trading for 1223. If I took the profit on it right now, let's see, 1220 minus 586. I mean, I get $634. I'm hedged on 9 accounts. I mean, I get $5,700, which takes away a little bit off my drawdown, but I'm going to see if it goes a little bit lower. This hedge is out to the end of January. So if we get a little bit more, downside pressure through the holidays, then I just want to see if I can get this thing to trade. My max profit's 23. I'm going somewhat conservative at like a $15 to $16 credit. I'll keep an eye on that one for a hedge. Okay. I did take some shares of NVIDIA. I've got a collar trade on it. NVIDIA, I have break even at 134. I've got a 140 by 130 collar trade. I'll keep an eye on that one. I do want to put in MicroStrategy's all around a 308. I did a deep in the money, 320 call. And I think right now I bought shares at 346. Fudge. So this could fall pretty quickly. I'm going to have to get a put in here that, let me figure something out. So let me see how many accounts have MicroStrategy. I know I bought some shares. I think my margin accounts did some MicroStrategy here. So 1, 2, 3. So I got that account and that account, that account. So 1, 2, 3. Pretty sure these are the, yep. Okay, so these are the ones that have my MicroStrategy. All right, so I have a 320 call that I collected $35 premium on. I'm going to look at a put to kind of offset that. Maybe I can still get a credit for it, but I need to have some type of downside protection only for this reason. If we're going to sell off and this is a high, low, lower, high, lower, low, I could still see another $60 to $70 of price dropping, which I obviously don't want to be in the hook for. The intention would be to lower my cost basis. So I have an expiration out to January 3rd. Let me see if I can roll this already. I mean, that covered call is already up 80% of the profit. I might just do some fancy math. I mean, I'm already up like $2,800 on that covered call. So that's pretty good. Max profit's around $3,500. I mean, I've got 79 to 80% of the profit already locked in. So let me see if I can just roll this even further. But it's going to change the math. Let me think about this. I'm either going to, 1, take the profit on the call and roll it down. Okay. Or 2, I know that I bought the shares at like 346, so I got to be mindful of that. If I take a partial profit on the 320 call, it's going to change the math on the break even, and I put in a collar trade. So maybe I do that. Maybe I just take, let me see what this is trading for. So 34.75 right now is, I'm able to close it for, almost $2,800 of income. I mean, that does help. That brings my cost basis back up to around 320 or so. Let me see. It's crazy how fast that was. Okay, the other option is, I mean, I don't think we're going to get to 320 or higher. I could be wrong, but I'll do that. I can do this offline. I'm just thinking whether I take the profit on my covered call and then add a collar trade. That's going to play with my numbers a little bit. So if I did MSTR, so my break even's 312. But I just want to have some protection to the downside. I'll probably go out a little bit farther as well. So I think what I'm going to do is this. And if I put this trade in the Pulver alerts, if anybody's in this trade with me, the idea was to be an income play to get it called away for like $785. If it's above 320 by this Friday. If it's not above 320, I want to make sure I have some downside protection just in case this thing's going to go a little bit lower. I mean, I talked about this, MicroStrategy is essentially Bitcoin on steroids. It's highly volatile, high, low, lower, high, lower, low, potential symmetry. If this thing's going another $60 to $70 lower, I want to have a long put on that trade to lower my cost basis too. Okay. All right. So if I put in a collar trade, I think I'm going to do this. Let me see what I can close this for. So that would give me a net. Close this down. Let's see if I get $7 for this trade. $7. Filled at $7. Okay, that's not bad. $7. Filled at $7. Very good. And this one here, $7. See if that'll close at $7. $7.05. Okay, so math is going to change a little bit. 34.75. And taking away 705. So I actually collected 27.70 net on that position. So net is going to be 27.7. Net credit. And that would be 346.90 minus 27.70. That puts me at a break even of 319. 319.20. Now I can do a collar trade. Okay, so now adding a collar trade. That way I can protect it to the downside and get it called away. My break even's 319.20. If I go out a little bit further, now I might play around with this too. Let me go out to the monthly expiration here. Actually, let's go out to the end of the month before we have earnings on MicroStrategy. Right before earnings. So let me switch the chain here. So my break even's 319. If I want to get it called away at, I mean, it's crazy. Like I could sell a 310 or even a 300. I'll do an in the money again. I'll go $300, sell a call at 300. And let me see if I can buy a put. I mean, look at this. This is pretty nuts. I can get, that's not enough to get it called away. So I'm probably gonna have to do something like this. If I do a 310 by 300, gives me 318, 319, it gets called. Nope, that's not good enough. Maybe go 305, 310. Let me just focus on this. So if I just want to do an in the money, so I get $40 to lower my cost basis here. Let me see if I go out of the money. So this is probably pretty good. Now, this would be something out to January. We'd have to fall really aggressively over the next maybe 1 or 2 weeks for this trade to be profitable. But here's how it works. If I have a break even of 319, okay, and I get it called away for, I'm getting a $31 premium on this. So 319 minus 31.53. Let's just say that we're at 320 and we're taking away $31. Well, that's what? 289. My break even's 289. I get it called away at $300. I still make $1,100 profit on this trade. I'm also protected the downside with a 250 put that cost me 1055. So if price is going to drop aggressively, this put option gains in value, which would allow me to lower the cost basis even more. So to me, it's a safety net where I can still make about $1,000 on the stock. And, if it goes up and I, could have made more money, it's like, okay, that's fine. But this is a pretty decent way to play this. Let me see what this looks like if I do the math at like a 305. 305, still get like $28 of income. So if I go 319.20 minus 28.50, so I get it called away at 305. I kind of like that one. $28.29. I think I'll do this. All right. I'm going to try to get this for $29.50. $29.50. Let's see if I can get this to work. Hopefully this will fill. So $29.50 not filling. Let me try 29.25. Okay. $29.15. Come on, man. $29. $28. All right, I got filled for $29.25. Good. Similar order. $29. And last account here. Come on, don't be greedy on me. $29. Don't make me change this price. Even if I went 28.75, 29. Come on. I'm seeing the bid at 29. Let's go. 28.90. Bid's 29.20, man. 29 bucks. All right. Just trying not to get the price differential that severe. I mean, it's 50 cents. It's not the end of the world. 28.50. All right. Somebody's going to make $100 less. 28. All right. So I'm going to do the conservative math, and I'll get. I had to do this stuff, so bear with me. I'll go to some top-down analysis. We still have plenty of time. I got to do the math. So now I'm going to take I got 29 on $29, $25, $29, $28. I'm going to take the lesser of all of them and just calculate that as my break even. So now adding the collar trade, which is a 131 expiration, 305 sell call by a 245 long put for $28 credit. So the break even on the ownership now is 319.20 minus $28 puts me at a break even of 291.20. That's like the most expensive ownership that I have is 291.20. So if called away at greater than 305, I will keep 1380. So that's a 1380 income play over the next few weeks. And that way, if things get really nasty to the downside, also I want to note what that put was worth. The put was around $10. So I added the collar trade, long put for $10 debit. So I just want to make a reference because if that debit increases up to, let me actually check exactly what this debit was. Let me go history on this account, MSTR. The 245 put was 963, even cheaper. Good. So that put's already paying out a little bit, and hopefully it has a lot more to go. So I have a 9.63 debit. Because if I pay attention to this long put and we have price on MicroStrategy dropping even further, if this goes down, 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 then I can take off the long put for additional profit, lower that even further. And then if it still gets called away, or I can roll down my call. So all I'm doing here is this. I bought a stock, right? And I sold the deep in the money call that lowered my cost basis down here. So that was the initial plan. So that's what's in the Pulver alerts. I bought the shares. I did an in the money covered call, which brought my break even down here. Everybody follow me? And so because current price is below my break even by about $9 or $10, I took the profit on the covered call, okay, and that increased my break even just a little bit higher. So now my break even is up here, and here's current price. So what I did is I put in a sell call and a buy put. I lowered my cost basis again. Now my break even is below current price. My break even is all the way down to 291. Okay. So this is what's my favorite stuff about trading options. I bought this thing at 346.90. My current break even is 291.20. I've already saved myself $55 in costs using options. Yes, this is MicroStrategy. Yes, this is crazy volatile. But for me to allocate, I don't know, maybe let's say $18,000 in capital and generate about a $1,400 profit within about 3 or 4 weeks, that's not too bad. let's say I get 1,400 bucks out of the 1,800. I'm turning a 7.7% profit within, 2-3 weeks. And the most important thing is lowering my cost basis. So if price goes down further, I can still lower my cost basis. And if price goes up, I can still get it called away and I make income. So anyway, that's MicroStrategy. I had to do that. NVIDIA, same thing. SPY, I've got some ownership there. All of my own positions, I'm putting on mostly collar trades. That if price goes up, I get it called away. If price goes down, I'm protecting the downside. To me, that's the most important thing. Okay. All right. So let's just do a quick spot check. We'll get some currencies. We'll do some top down dollar, gold, oil, silver, crypto, things like that. Take a look at some currencies. 1.53% on the SPY. Qs are down 1.7%. Dow is down 1.4. Russell down 1.5. Volatility is up another 14%. Okay, not nearly the same as this was this was the second largest single day volatility spike we've seen after the first largest we've ever seen. It's crazy how in 2024 it was a pretty straightforward bull market, but we had two of the largest single day volatility moves in the history of this instrument, which is kind of scary. But look, even though it's up 14%, it's off the lows. I mean, we're probably going to be spending a lot of time, let's say between like 15 and 30. I mean, we get up into like the high 20s and 30s. This is a mean reverting instrument. We're unlikely going that high without some type of crisis, right? So if we have, 2022, which was a pretty healthy bear market, it really was just in this window the whole time. We just had a steady volatility window. But we didn't have like the outlier event like we did in August. Okay, SVXY. Do I want to do anything here? Kind of, but not really. Not really. Only when we have like big vol events. I'm going to get this. I've got some puts out here at 35. That'll be fine. Dollar index, as I said, don't fight the dollar. I think the dollar is going to remain stronger. This should be pushing my dollar Swiss and dollar CAD. Come on, dollar CAD. We don't have non-farm this Friday. I think it's next Friday, but I'm looking to see if I can push this thing to my profit target at 44.80. Dollar Swiss. I've got my stacked orders, trying to get this thing to go even further up. Got another buy stop level, and my profit target's at 92. So everything's running pretty solid. I've got 1, 2, 3, 4, 5, 6, 7 positions running on dollar Swiss right here. I've got over 25 running in my TCFX account. And let's see if we get up to 92. That's my profit target. So dollar index, don't fight this thing. Okay. Without confirmation, and the crazy part is like this is such a stupid aggressive trend line. So even that trend line breaking, I wouldn't trust it. Right? If we all of a sudden drift sideways over here, like I still think that's a fake out trade. I wouldn't be bearish on the dollar right now unless we get below 105.50. And if we take out these lows, like be cautious, like maybe there's that broadening pattern if we don't really have any direction. But something tells me like this dollar could run all the way back to 109. If this thing turns hard at 109, then maybe we have, this large liquidity pocket that gets hit and the dollar is going to fall from there. Otherwise, I would not fight the dollar until we have just this super obvious, amazing, this is where you sell the dollar. Let this dollar thing run to 113, 114. Give the euro dollar a chance to fall to parity or lower. I mean, that's where I'm interested in. Like, yeah, I'm going to short the heck out of the dollar, but it might be, euro dollar trading at 104, 103.80. I mean, we might drop the parity, So if anybody's short euro dollar, it's looking pretty good. I hope it gets to parity for you if you're short. I am not a chaser. And so if we go down towards parity, I'm probably interested in buying, and starting to use that level and start to test these lows and try to get back to the sticky point at 105. That's going to be my trade. I'm willing to trade really, really small until I get the price pattern and confirmation that I want, get the aggressive trend line that I want, start building my position on the right-hand side, and then stickiness is all the way back to 105. There's so much structure at that 105 level that all I'm looking for is getting in. And again, I'm anticipating a little bit if we came down to parity, but I think it's such a good spot to just be testing. Trade small, see if I could do like a 1 to 3% drawdown. And when it confirms, try to turn this into like a 6 to 10% upside gain. And so I can still turn it into a really nice reward to risk. I just have to trade it small and then build my position back up. But that's my plan on euro dollar. That's my plan on dollar index, not fighting it. Okay. Oil. Oil at 71, another chart to watch as far as the stories of 2025. If oil, I think oil's got to be, we have some good 200 EMA structure here. And so I'd said if we break out of this level above 72, be on the lookout for higher oil. But something tells me we could have like another pop to the 200 and then another fade. So I wouldn't do anything as far as like big breakouts on oil unless this thing can clearly spend some time above the 200 moving average. And so if anybody's long oil, I mean, it makes sense. You can get long and play. There's your defined risk stop. Okay. But oil is going to be a big story because if inflation is going to improve, we probably need to see oil continue to trade in this really choppy range, or oil needs to break the floor. That's going to be pro deflation, right? Or just overall like capping the inflation pain. But if oil breaks higher, we're talking a second wave of inflation that could be very, very painful. All right. So I don't know what's going to happen, right? That's a question mark. That's a question mark. I don't know what's going to happen here. But based on this current structure, if oil pops up here towards like $74, I could see it fading back down. So just be mindful of that type of structure there. There's still some wiggle room for oil to bounce around and not really give us any definitive direction, just be really choppy. Okay. Let's see here. Natural gas had a pretty good run. I'm not doing anything with it. That's a big gap though. So big gap up after a gap lower on Friday. Interesting price action. I don't know. I'm not chasing natural gas, but it's up. Gold. I'm still waiting to see if gold will settle in around 2450 to 2400. Another thing with gold would be the correlation with the dollar. If dollar is going to continue to push higher, there's going to be pressure on gold. Okay, so let's see what it does. GC, same thing. Let's try to find the 200 moving average. I'm looking for it to settle in high, low, lower, high, lower, low. Find the 200 moving average. XAU, high, low, lower, high, lower, low. Find the 200 moving average. Okay, silver. Silver, trying to revisit some fresh lows. Hopefully, we're not going too much lower than 26 on silver. Bitcoin at 91. I've said this. We hit symmetry. This was measured already. Wasn't really surprised to see a turning point here, right? So we hit symmetry. We're turning. We're seeing a little risk off, and so this could quickly fall, right? If this quickly falls, I said 90 and 80. If you're picking your battles here, this is a really nice pocket just to wait and see if it gets filled. If we're going to find some efficiency, it'd be nice to see kind of Bitcoin trading into this window or even this window. So I like 80K. If we have a spot price at 80, I think that's a level I consider getting back in. And if we came down to fill that pocket in full, 71,000. I mean, I'd say 80,000 to 71,000 would be like kind of bargain levels for me. But I'll stay patient. It's like just let it do its thing. Okay. BA, that's Boeing, right? Yeah, that's a tough one. It's like a government subsidy. Oh my gosh, you kidding me, man? I closed out Boeing at like 166, I think. Let me see what I did here. History. See if I have Boeing in this one. Yeah, so I bought shares at fudge. Let me change the account. This one was a transfer. So I bought shares at 154, got out at 166. It's up to 175. I was long Boeing. It's fine. I still have a pending order on Boeing at 120 and at 91, or I did 120 and 95. I'm not in the trade anymore. I got out of it. I mean, this thing responded nicely. I was getting out for this reason because we've been below the 200 moving average. As soon as we got to it, I was saying, okay, good enough, just in case this turns down again. So I exited around 166. So I'm no longer in it. Okay. So anyway, if there's anything like if Boeing can pop back up here towards, let's say, $200, there might be a potential bullish head and shoulders here. Might be. But I don't know how Boeing can go up without the stock market going up too. I don't think this is a company that's just going to do well on its own, right? I mean, fundamentally, this company still looks good. The problem is it's like this weird government subsidy. It's like the only game in town, I mean, whether you're making airplanes for war, airplanes for flights domestically or internationally, Let's go Boeing. Okay. I mean, price to earnings, price to sales, like really cheap. Price to sales, price to earnings. I mean, fair value at 196. We're trading at 175. So yeah, we have some gaps that this hasn't caught up with yet, but still, I mean, it's crazy how low the price to sales are. And you've seen like Lockheed Martin, you've seen Raytheon, you've seen some of these defense aerospace plays like rip to the upside since Trump was elected, but a lot of that's been being faded. So anyway, I don't know what to make of Boeing outside of I bought it at a decent enough price. I got out of it, and now I'll wait. You know, I've got some orders back here at 125. If I miss it, I miss it. Okay. What else? We did that. Let's go Ethereum. Ethereum's at 165. Ethereum's at 3,300. Had a bit of a pullback here. As long as my EETH over the next couple weeks stays above $60, it's full profit. I might end up taking the profit if I can. I took some partials on some of the accounts earlier, so maybe doing the same thing there. Nikkei hanging out. EWJ hanging out. FTSE still choppy. DAX bouncing off some moving averages. Argentina, give me a bigger pullback in Argentina, please, and I'll get long. I did find a screenshot. For some reason, my stupid email is not sending. My phone is not sending my emails. It's probably because I have like 197,000 Gmails. Point is, that was the bond stocks correlation. I had another one with how impressive the inflation story has been on Argentina to go from like 25-30% inflation down to like 2.4. So if that is anything that like the US and other, more developed nations on a much bigger scale, it's like, well, if there's any way they can take like a fraction of that improvement in performance, that maybe we can get some inflation to help. But a lot of it was government efficiency, which is Elon Musk going to do that with the US government? I don't know. Probably not. So anyway, China down a little bit. Apple, let's check Mag 7. This is the rebalancing I was talking about. Everyone's exposed with a high concentrated Mag 7. We hit recent highs. This was our last holiday run that we saw, all-time highs on mostly every Mag 7, and we've had a bit of a drop. So Apple down to 251. Amazon's at 220. I've got these 220 is my covered call collar trades on Amazon out to February. Google, I'm still in. I wouldn't mind doing some income trades. I've got some income trades here on Google. Meta, same thing. Meta's got a pretty high bar count. I'd love to see it come back to the 200 moving average around 525 or so. Microsoft pulling back. I took some profit on debit spreads. This is an income trade, some ratio spreads. I'm going to keep exploiting that on Microsoft. Netflix, another big bar count. Man, this would be an awesome one just to see. And I don't know if it's going to go, sideways, go a little bit lower, let the moving averages catch up. But man, just like any type of gap fill, yeah, I these are stocks I like having. I want some discounts. Nvidia, I have it collared 140 by 130. I own the shares at 134. My goal is to try to work my cost basis down to 115 or lower. If it gets called away at 140, I still make $6 a share. If it's lowering my cost basis, then hopefully I'll flip it for over $10 a share. Tesla down to 419. Got some dollar cost average levels in. I put in a ratio spread last week in the Pulver alerts, the 280 by 275. I collected, I think I collected like 2 something on that one, 228 credit. So it's either income for credit, probability assignments like, I don't know, 15%. So it's mostly going to be an income play, but I would happily own some Tesla if that was the case. Berkshire coming back into, this would be interesting. Another pretty high bar count on Berkshire. We haven't hit this one since October 2023, so we're probably in the high 280s. 294, yep. So if we get a bar count on Berkshire that hits, let's say, the August lows, I might be interested in some additional Berkshire plays. Again, I did a ratio spread here. There's about a 10% chance of assignment. So it's an income play. I might add in additional income plays if we get a higher IV on Berkshire Hathaway. Bonds we did. It's nice to see that the 10-year is dropping. I hope it drops a lot farther and faster. I don't know if that's going to be a sign of the times that the bond market's going to start showing some gains. So bonds could be up as yields go down. Let's find out. The disinverted yield curve, I'm like I said, concerned with in 2025 that we're on borrowed time before it's just a full-on recession feel. The disconnect has been that it's mostly been a Main Street recession since 2020. It's been kind of this rolling transition. Everyone's feeling it at some point. Inflation's just sticky and high. It's essentially a 4% inflation target, or a 4% inflation feel that the Fed's trying to tell us that we're trying to get back to 2%. But we're not doing it very well. Core PCE has been going up. We're way above the Fed target, and there's a long ways to go. But is it going to be a full-on like Wall Street and Main Street recession all at the same time? Remains to be seen. I don't know. We could have some housing market pain this year as well, with it being super unaffordable. Some other stocks. Let's get to currencies now. Okay, and then I'll wrap things up here in a little bit. Aussie CAD, still long on Aussie CAD. I will be dollar cost averaging in at probably this low, and this low. And this is a currency pair that I rarely worry about. So this low to this high, I started to buy in here, and I'll just wait. I'll add another dollar cost average in, work my cost basis down. Even if we get back to the halfway point, I'll take a loss here and then take three winners or stack them up for a winner. So it's just a range trade. If you want to buy Aussie CAD, I like buying it super low. So buy it between like 88 and 86, and then take this higher towards like 90. If this still ends up waiting to break back above and get back to the highs at 94, like that's the trade that I'm in right now. Okay, I'm still long on the Swiss crosses, still enjoying some positive swap right now. We're responding off these lows a little bit, which is pretty nice. Let's see if we end up breaking a recent high. If we put in a bit of a bottoming pattern, then maybe there's some promise to the upside. This thing takes a, this would be just a wave structure. So wave here, 1, 2, 3 pullback, and then we have another push coming up. So I'd measure that impulse, right? Measure the impulse, measure the symmetry, try to get back towards like 6,000. But I'm going to hang on to that one. I need this one to take out a high around 57. Otherwise, I said this, I'm willing to dollar cost average in towards a flash crash low. Okay, yen crosses, not doing anything on the yen. Aussie New Zealand, I'm still long. Hang on to this one a little bit longer. Aussie dollar. Getting some positions filled. I'm taking this down towards 6,000. I'm just keeping it really small right now. Oops, CAD Swiss. CAD Swiss is responding really nicely. I've got a bunch of positions on CAD Swiss. My measured move is up to 65. Swiss yen. It's going to hang on to this one. See if we can get to symmetry on that yellow box. Euro Aussie. Look left on the chart. Look for some resistance levels. I don't really have a trade on this one. Euro CAD I don't love either. Euro Swiss I'm long. It should be bouncing nicely off the lows it is. So this kind of 92 level held pretty nicely. I'm trying to get this one back to 99 or 1.00. Euro pound still just a little bit upside down in the trade. I'm just going to hang on to this one a little bit longer, see if we get to this 200 moving average. Euro yen, I'm not touching the yen crosses. Euro New Zealand, we did have some resistance holding. So right around this 8,500 zone. If anybody's following this, I mean, there was a good little move in August and previous highs back in August 2023. So if it turns, like look for a topping pattern, this could turn and just be a big range trade. Euro dollar, like I said, I'm not chasing this one lower, but if it gets down to parity, I'm going to start looking at buying. Pound Aussie, maybe a turn on the shorter time frame. Just be careful on the high volatility there. Pound CAD, same thing, super choppy at the tops. Pound Swiss, I'm still holding long, trying to get this, trying to get to 1.1950. Pound New Zealand's, watch the smaller time frames. This is stretched away quite a bit. Every time we've seen a big move up, it pulls back. That to me looks like a pretty big move up. If it gives you a topping pattern, maybe a tighter stop, trade it back into some of the moving average or some of the previous structure. Pound dollar, I'm out of this one. This one's probably breaking into some trend lines. Yep. So pound dollar is definitely vulnerable to the downside. I'm not sure what it's going to do. This could be lower and then lower highs and lower lows. We could resume this downtrend. 120 is a very valid target. We could have just a big range from like 120 to 130. I don't think we're coming all the way back down to 1.10 again. But I like euro dollar better. I wouldn't even trade the pound dollar at this point. I think euro dollar is a cleaner trade, so I'm going to stick with that one. New Zealand CAD, similar to Aussie CAD, just trading the big ranges. Range levels there, range levels there. New Zealand Swiss, positive swap, staying long. Willing to take this one down into the flash crash lows at 5,000. New Zealand dollar cost averaging into it. I still didn't get filled at my 56.05 level, not yet. I'm still waiting and watching, see what happens. Dollar CAD, I needed to push up to 44.80. I'll keep this one running. I think we have the ability to hit symmetry and come after these 4,600 highs, but I'm going to try to get out at 44.80. Dollar Swiss looking good. Need this to go another 134 pips up to hit my profit target on all my positions. That's going to be a big fat chunk of profit. I might cash in over 10,000 pips of profit on Dollar Swiss. I got a lot of positions in, but as soon as I started getting positive swap in 2023, I just started to scale in small, scale this thing up to, a couple standard lots and hopefully cash in for a nice big payout. Dollar yen, your guess is as good as mine. It would make some sense that if we go to these highs at 162, does the BOJ start to do some silly stuff again? I don't know, maybe. I've said this, I'm not going to trade the yen crosses in Forex. I'm going to trade the Japanese yen futures, which is /6J. I'm going to trade that instead because I can do it defined risk and I don't have to be spot on with price. I don't get there's no, stop loss hunting. There's no liquidity sweeps. It's like I just put in defined risk. So I'll probably trade that with debit spreads if the price is right. And that's about it. I haven't looked at any exotics in a while. Dollar peso. Check dollar krone. Dollar South African rand. Yep. I mean, the dollar's just been strong enough. It's just, this is the milkshake theory. Like dollar gets stronger. It just sweeps up all these emerging markets. Dollar rupee, what's the dollar won? Dollar won's probably going way higher. Look at that. So just since the October lows, we've seen a pretty big move in the dollar won. It's about a 5% move off the lows. Now you can look back into these highs around 2022. I do have to wonder, is the dollar won going to break resistance? One thing we are noticing here, see how this is making higher lows. This could be a very interesting setup where if there's a lot of manipulation in here, I could see that taking place. But man, this is poised for some bigger move coming later. There's potentially all sorts of geopolitical gamesmanship if we get the Chinese yuan getting way weaker. That's also probably a big help for the Chinese equities markets. Remains to be seen, but we'll find out. So Chinese yuan is not something I trade in currencies, but it does affect how I look at the Chinese equities market. Okay, Visa 315. Let me check and see how these are doing. Okay, a couple more positions here. Any other questions for me? CAD Swiss. Yeah, I'm already long CAD Swiss. I like everything against the Swiss. Aussie Swiss long, CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss. I'm long on all of them. Okay, I've been saying that for 2 years, so it's not a surprise. I'm holding them. I like them. It's positive swap. I'm dollar cost averaging. I'm putting more positions in when I like the confirmation. I'm going to hold those. Okay. All right. Let me take a look at Visa MasterCard real quick. I think I took some partial profits on one of them. Visa 320 by 315. Right now, it is a trade. So I got into it for $1.95. It's trading for $2.50. Might just take the profit on both of them if I can. MasterCard 3. This one actually looks pretty good. The 535 by 530. Got into this one for $1.95. And it is trading for $3.53. So I can get about $1.40 profit out of this one, which I might just take the profit and run with it. See if I can get $3.55 out of this. 353. Oh, 310. Come on, man. Just show 350. Cancel. I mean, 310 is still a profit. Ugh. I don't know. Let me do the numbers on it. I might just, if I can take both of them for a couple $100, I'm up 126 on Visa, and I'm up 175. I mean, I'm up 300 and some dollars. It's okay to take some profit. I might, because it's every account. So it's, $300 on 11 accounts, this little income grab. I might just do that. So silver's pretty well supported at 29, very well supported at 26. If the dollar gets stronger, expect gold and silver to get a little bit weaker. But silver to me is still a really good play. Technically, I like it going up to 29. Or I'm sorry, going back up to like 35. Gold, if it pulls back to 2450, 2400, I'm still positioning long gold. Gold is definitely more of like a 12 months out. Last year I was way more bullish on gold in the near term. This year it's more like I like getting pullbacks on gold. I'm looking out longer, like 12 plus months. Okay. All right. That being said, I'm gonna let you go for today. Happy Monday. Chandler and team let me know if we're doing a New Year's Eve, New Year's Day sesh. Just let me know. I know the markets are going to be closed at like 1 p.m., 1:30 tomorrow. Enjoy the New Year's. This is the final little holiday break that we get. So, the market's not going to go anywhere. It's going to be here whether you like it or not. I'm sure all of you that love trading are wanting to trade every single day. I've certainly made some improvising the last like couple of weeks of my trading because the markets are pretty light volume. There's some shenanigans happening where it's like, yeah, it's a big gap today. Look at the market. I mean, we went lower. I mean, today it's like we had a big gap down over 1%, and we're kind of right back where we started. But that's two pretty extreme gaps. And like I said, I don't think this is anything more than just end of year rebalancing and starting to get some profit taking. It wouldn't surprise me. That's all it's going to take. If you want to see the markets, get off this high concentration, that's going to put some pressure on the Mag 7s. But I would love to see 2025 start out with a nice healthy discount. Something in the 7 to 10% range would be pretty excellent. And then we can certainly build from there. But look, this wall of worry isn't going away. We've been climbing it all year. It's been a fairly straightforward bull market. We had a couple of hiccups, obviously. But man, to start out at like a 10% discount, it can get nastier. Like I say 10% because that's like a nice mild correction. But 10% can quickly become 15 or 20 and make everybody nervous. But if you look longer term, I'm telling you, if you just have a horizon of 5 years, 10 years, 20 years, it's so easy to make money. You just got to have a horizon. But if you're trying to make money today or this month or this quarter, it's like, it's a little tougher. So, but if you give yourself time, you're usually right. That's the beautiful thing about trading. Time in the market's good. Time in the market, right? That's the famous saying. Time in the market is more important than timing the market. So, all right. I'll let you go. Happy Monday. We'll see you soon. Okay. Thanks, everybody. Bye.